Today we have a fresh face, a market participant who's been around for some time now, but you wouldn't have really seen him a whole lot on business television. A new face, head of equities at Nuvama is joining us, Ajay Vora. Ajay, thank you very much and thanks for making it to our show today. I hope you're feeling comfortable. This is your first time on TV or on the channel. It's the first time.
Yeah, so I've been there once
Long
before
back.
this on PT now, but yeah, with you it's the first time.
Oh, great. Good to have you. Ajay, what's your positioning right now in the market? In terms of valuations, in terms of the data points which are coming, what exactly are the conversations you're having with your clients? How is this is the right time for what kind of positioning?
So Ajay, let me just go back a little bit, and when we had hit a high of around 18,800 in November, at that time still the global, the variable factors were not very much clear, and they were posing a bit risk. And at around 90,000 odd level, Indian markets were also looking pretty expensive. So we had taken a very cautious stance for a couple of months, maybe till budget. But over last few days or so, we have increased our long exposure in the market. We believe that we are very much at the same stage what we were in June 22, when we had seen almost a 10% correction in the market, and market was heavy with significant shorts. And on top of it, the valuations were also very reasonable at that point of time. So we are looking at a similar period right now. In fact, the shorts have been 2x of what they were in June 22. And if you look at the banking sector valuation, that has also come off very sharply in spite of they reporting fantastic numbers over last 2 quarters. So putting everything together, I think that we have consolidated pretty well over last 18, 19 months or so. And considering the pessimism in the market and cheap valuations, we have increased our overall long exposure after 3, 4 months.
So, are you saying that the case for risk reward turning favorable is getting stronger? Uh, what about the earnings? There is also a significant adjustment which has happened in the valuation front, also because market feels that certain section of the market may not, of the corporates, may not see the same kind of earnings quality or earnings growth which we saw 2-3 quarters back in the next few quarters. All of that also seems to be over in your view?
So Ajay, there are 2, 3 things to this. If you look at the entire broader market, and if you look at the whole consumption basket, which is the discretionary side of the consumption, that has seen a reasonable slowdown post the festive season, which is post November. And therefore, if you look at most of the discretionary stocks, be it the retail or the QSR or the auto sector, and quite a few the bottoms up stories, growth stories which we have, everything has seen a reasonable correction, I would say, ranging from 20 to 30%. And that, in a way, is pricing some sort of slowdown going forward and earnings downgrade, which is likely to happen. Now, if you look at the Nifty earnings also, 2 quarters back, we were looking at, say, broadly 950, 960 rupees of EPS for FY24 for Nifty. I think that number is now settling more closer to 900 rupees, 900, 910, which is just a 10% growth versus FY23. So FY23 will end Nifty EPS at somewhere close to 800. And now if you are looking at 900 EPS for FY24, it's just a 10% growth. So in a way, the expectations also have come down from say 15, 16% growth to now 10%. And that is the reason also you have seen some sort of, valuation contraction in the market. So we were trading somewhere close to 20, 21 times earlier. Now we are closer to say around 16 and a half, 17 times. So we have spent almost like, 18 months in this range, and valuations have also contracted quite a lot. So I think that, things are getting a bit, on the positive side. And global markets also, if you look at it, most of the negatives are known. In spite of all the negative news, the US markets have also stopped correcting, and the volatility index over there has also started to come off. So everything put together, I think that we are more or less setting the stage for a reasonable bounce from here.
Okay, so if the case actually materializes, Ajay, how are you looking at the market, scanning the market for opportunities? Do you see more value mid cap, small cap, or select large caps also have corrected a whole lot? Say, for example, Reliance coming down 35% from the top. Where do you see, or is the combination?
So I think Ajay, the way it can pan out is, first you will see a reasonable inflow from the FI side, both on the fresh purchase as well as the short covering. Because as I said that at one point of time in June 22, their highest short was somewhere close to 10-11,000 crore, which in this cycle over last 2 weeks or so, it had reached almost 18-19,000 crore. So first leg can be a short covering. Secondly, you must have seen the numbers. In last 2 years, they have sold close to $60 billion. So FIs have sold $35 billion last year and $25 billion this year. So all put together 60 billion, out of which $10 billion has been only in last 3-4 months. So honestly, $10 billion for them is not a big number on their total holdings of close to 530-540 billion dollars. It's just 2%. But for our market, it puts a lot of pressure, and therefore any sort of reversal in that flow, even a $2-3 billion inflow plus the short covering, we can see a reasonable bounce back in the first phase, at least on the large cap side, where things are looking oversold. And as you rightly said, stocks like maybe Reliance and the banking sector can see a decent, bounce from the current levels.
Okay, so it will be led by large cap because there will be a reversal in the FI flows. Subsequently, let's talk about mid cap and small cap end of the market, because that's essentially the story of India. That is also where influential HNI investors and family office kind of money loves to hunt for value. Where are you? What opportunities are you seeing there?
So Ajay, if you look at that segment, the behavior has always been that segment requires, I would say, three important things. One is, the growth. Definitely, without growth, mid and small cap will not perform. Second part is the liquidity, and the third is the overall sentiment, right? So as of now, if you look at it, all three are struggling in a way. Growth is coming off, at the entire country level and globally also. Liquidity, if you look at it, the system liquidity, which used to be somewhere around 8 lakh crores surplus at one point of time, is now flat. And sentiment wise, if you look at it, the small and mid cap segment has underperformed the large caps over last 18 months by a wide margin, and that too at the headline level. But if you look at the stocks, most of the stocks, good quality stocks have corrected by almost 30 to 40%. So the sentiment is also not there. But in a way, we all have seen this cycle in the past that these are the best times to build a small and mid cap portfolio. You have to do your own research, and where you feel that at least a 25% plus earnings CAGR is possible over next 2-3 years. I think that is this is the best time to build that kind of a portfolio. As if you look out 2 years from now, that portfolio can do reasonably well versus the large cap.
That's a wonderful point you made, that this is the best time to make a small cap, mid cap portfolio with a view of 2 to 3 year plus. Best returns will be made here. Let's give a flavor to that a little more in detail. What do you like in mid cap, small cap? Where's your house most bullish on in the mid cap, small cap end of some themes, some sectors, or even stocks perhaps? Your top calls.
So mid caps, has always been a thematic kind of an investing. We all have seen in the past when a particular theme is playing out, the entire sector does, pretty well. Like what we saw with the entire chemical sector, or what we saw with the mid cap IT space. It will be a similar underlying theme, but something new. Where the growth can actually, be close to 30-40%, and the stocks can get re-rated. So where we are very positive is the whole premiumization theme within the country. And maybe not a specific example in case, but what happened recently with the DLF launch. In a matter of 3 days, they had planned to launch around 2 million square feet, but eventually they launched 4 million square feet, and they got a stupendous response on their launch. And in a matter of 3 days, they sold inventory worth almost 8,000 crore. So I'm saying that for a apartment size of around 4,000 square feet, and a ticket size of say around closer to 7 crore is being sold in a matter of 3 days and to the tune of $1 billion. So my sense is that people are ready to spend. People want to upgrade. Where the wealth lies, people are looking for premiumization. So across all categories, this is just an example of a real estate. But obviously, there'll be a lot many other categories where we are seeing a massive upgrade in terms of consumer preferences. And that actually can be a next big theme, because we have seen in all other emerging economies, whenever the per capita income crosses around $2,500, every incremental addition to your income will be spent on premium goods and upgrading the lifestyle. So our sense is that, whichever pockets, be it, on the discretionary side, be it retail or travel or, n number of other things, this whole premiumization trend is likely to pan out in our country over next 2 3 years in a very big way.
Interesting. Ajay, one last word before we let you go. You must be in your course of business, maybe talking to a lot of corporates, mid, small, large, all sorts. What is the feedback you're getting? One, A, the demand environment, be it B2B demand or B2C demand, and the second is margin environment. Because though commodity prices have come down, will this coming quarter be the one where easing of margin will be seen, or it lies ahead 1 or 2 quarters?
So, Ajay, if you look at it, post COVID, and since the time the entire lockdown was behind us, people have been in a spending mode for a fairly long time. And as I said, that till last festive season, that trend was very much there. But somehow we are seeing that, and what the feedback also which we are getting from maybe clients and also the corporates, is that somewhere inflation has started hurting people at the, maybe I would say, the lower end of the pyramid, or maybe in the middle end of the pyramid. To that extent, the volume in each and every business has started to slow down meaningfully. And therefore, if you look at businesses like QSR or a retail or an auto, the inquiries and the overall volume growth is seeing a reasonable slowdown. But our sense is that, if you look at the interest rate also, that is peaking out more or less in India by maybe next 25 bips or so. Once you start seeing inflation as well as interest rate start coming down in the second half, and the overall job creation is anyways there, we'll again start seeing a reasonable demand on the consumption side. So as of now, the feedback is, the environment is a bit, I would say, subdued. But that is what market is pricing in right now, and going forward, it will definitely improve.
All right, Ajay, we'll let you go on that one. Thanks so much for your time. Look forward to interacting more often with you from here on.
Thanks.
Thanks.